Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good afternoon, everybody. Thank you for being back here with us. We are getting settled in for the FOMC meeting minutes, which come out, by the way, in about an hour from now. In this live stream, we'll be taking a look at several markets. We've got plenty of time here today to go in depth and really break down lots of different charts. So as we kick it off here on the stream, do me a quick favor, smash that thumbs up button as we get started here. And at the same time, if you guys could do me a quick favor and let me know which charts would you like me to cover in this upcoming hour, do me a quick favor, just comment that down below here or chat it here if you're watching with us live. Take a look at the markets here as we kick off. We've got the S&P 500 coming down lower here this morning. I'm sorry, this afternoon. NASDAQ, same thing. Dow, same thing. The dollar is shooting higher. You have the euro, you have the pound, both of them shooting lower right now, which would make sense on a stronger dollar. You have oil continuing to push higher, and we are long oil, by the way. So this is, keep an eye on that right-hand side of the screen. Long oil currently. And gold, of course, coming down hard here today on the hourly chart. We'll take a look at, again, all of these markets in closer detail. We may even look at some Bitcoin, look at some crypto today as well. We've got plenty of time, like I said, so we'll be doing lots of charts. By the way, I'm just going to read off some of the requests that you guys have been saying here. We got gold, lots of gold, US 30. So we want to look at some Dow Jones, look at some stock indices, pound Aussie, gold, pound euro, euro dollar. Because I have so much time here today, we will be taking a look at lots of charts, and I'll try and even do a lot of the ones that you guys request. So stick around with me, get comfortable. I've got my coffee here, guys. I don't know if you are a coffee drinker or if you're a soda drinker and you know, whatever you're drinking, as long as it's not alcohol. No alcohol while you trade. That's a bad idea. Anyways, let's jump into some charts. We'll go full screen here. Switch over to the main view, and you can see my NASDAQ position not going too well. Looks like I might stop out on the NASDAQ. I do have a position here. Yeah, looking like we're probably going to stop out on this first attempt for the NASDAQ. I do have other attempts ready if this does trigger lower here today. But at the same time, like I mentioned earlier, we've got oil going well, which oil here, we'll go pull it up. Oil has pushed nicely off of the lows. This position for me working well. We'll continue to watch oil. I like the story for oil right now quite a bit. The economic data of the U.S. has been really strong, and if you do see, you know, rate cuts eventually come, I imagine that will also be kind of bullish for oil, right? Because that could be stimulative to the economy, and if the economy continues to stay strong, you know, oil could be really interesting. So staying bullish oil for now. And we'll get into more. We'll get probably more detail on oil in just a minute. Let's go take a look at the dollar. So I like to say when I do my analysis that the dollar index is kind of the core component to all of my trading, simply because the the dollar index it is such a key factor in most of the charts that all of us are watching. A lot of you guys mentioned things like currency pairs, you mentioned gold, you mentioned the indices, and the dollar is kind of crucial to all of those in terms of the market's fundamental story. So what I mean by that is that right now, the reason we're all here for this event, the FOMC meeting minutes event, is that if meeting minutes come out and they showcase that the Federal Reserve is looking to continue to be kind of resistant to rate cuts, if we get that narrative, if the expectations for rate cuts gets pushed out further into the year. Right now, I think the market is really thinking that June is going to be when we see that first rate cut. That's kind of the consensus right now. So if the report that comes out, the meeting minutes that come out, they come out with some form of a hawkish tone to them. What will likely happen with the dollar index is in that case, the dollar would likely rise, right? Because the idea would be hot sort of reads and economic data and the key inflation metrics from last week. If that is pressuring the Federal Reserve to stay true to its kind of mandate of let's keep inflation coming down, that could strengthen the dollar. And at the same time, if they point to the idea that rates could come down sooner because inflation has also made progress, that could bring the dollar lower. So the reason the meeting minutes matter so much here, guys, is because there's a case to be made for both sides, but we need to see what the Fed is thinking. That is why the meeting minutes matter so much today. That's why it's a red folder. That's why we're watching this together right now. We're waiting for that to come out. Okay. So that is what I need you to understand with just how important this meeting minutes today kind of is. It gives us a little bit of an insight into what the Federal Reserve is thinking, what they are looking closest to. You know, there's also something to point out here, guys, when it comes to unemployment. You know, when we go take a look, for example, I just want to pull up unemployment data here for a moment because we can. Let's go look at unemployment rate. Does this work? Let's see. It does. Okay, so unemployment, it is the dual mandate. There's two things that the Federal Reserve really says they care about. We all know the first one, which is inflation, right? The Fed has been nonstop talking about we need to get inflation down, ... right? The other side that I'll be watching for is unemployment. Now, what do I mean by that? Well, if the Fed mentions that they need to cut rates sooner because they don't want unemployment to spike, remember, this is a dual mandate from the Fed. They want employment to be healthy and they want inflation to be sustainable. They're working on the inflation side, but if they stay too high too long, it threatens the second part of their mandate, which has been a strong, strong labor market. So at some point, this becomes a bigger play. At some point, if you keep rates too long, is that going to start to threaten the jobs growth? Well, it hasn't done that just yet. And so if you're somebody who is more bullish on the dollar, you might say, well, Nick, the labor market stats, which don't seem to want to load right now, they've been really strong, right? In fact, let me refresh the page. I think that's probably our issue. If the labor stats have been really strong overall for the US, maybe that gives the Fed a little bit more room, a little more wiggle room to work more on that inflation side of things, which all that to say could be stronger for the dollar. I lean personally more on the bullish side of the dollar. Okay, we got our employment data. So again, understanding the fundamentals here is pretty big, guys. Check this out. Overall, we have seen really strong jobs data. And that strong jobs data has been, reflective overall in the U.S. dollar, right? The dollar's been somewhat propped up on strong labor, strong economic reads, and throughout 2023, there was a ton of surprise to the upside in terms of economic data. That's the question if we're going to continue to see that in 2024. I lean towards yes. So yeah. So again, guys, we get that report, by the way, in 51 minutes right now. I don't know if you guys have ever seen one of these before, but this coffee mug has a button on it, and that button allows you to actually heat up the mug, which is really cool because when I do these streams, I'm talking a lot, and coffee helps me to kind of stay caffeinated for the events, right? And this is a really cool mug. You guys should get one for your trader friends or for yourself. Anyways, the next one I want to look at in reference to this is gold. And if you take a look at gold, I know a lot of traders here in this live stream are traders that trade gold. Everybody seems to really love gold, and I don't blame you at all. I trade it myself. Well, seems like I used to trade it. I've been able to trade it recently because the market here on gold has been very, very range bound. And when a market trades like this, it leaves me not a lot to do with my trading strategy. My trading strategy, well, first of all, my trading strategy is a mix of technicals and fundamentals. But I do need the technicals to play ball in order for me to actually get trade setups. So what I'm looking for is I'm looking for breakouts. I'm looking for movement one way or the other. If we see a break to the upside and the fundamentals start to point towards rate cuts are coming, then gold might be a play for me. But as we speak, gold has been a struggle to really find any trades on. And I don't want to force anything because this thing has been so choppy. If you've been trading this thing from a trend follower's perspective on the swing trading basis, it's been really difficult to find big moves in the market. And again, that's because there's a mixed picture here for what the Fed is going to do next. Today's FOMC may help us with that. If you get, again, going back to the US dollar breakdown we just did, if we get a strong dollar on a Fed that sounds more hawkish, or what I like to think of as less dovish, they're still going to likely cut rates this year. If you get a less dovish Fed, then this pushes gold down. Why? Think about this, and I want you to think about this for a moment. Why does a less dovish Fed make gold go down? This is a quiz for you guys who are aspiring fundamentalists. If you're somebody who trades gold, why would a more hawkish sounding Fed weaken the price of gold? Gave me my chance to sip my coffee. The reason is because it would strengthen the dollar. A stronger dollar pushes pressures down on gold. But at the same time, the U.S. economy would also be strong in that situation. Like if the impression from the Fed is, hey, this U.S. economy looks pretty hot right now, it's going to strengthen the dollar, but it's also going to reinstate to some degree confidence in the U.S. economy. Confidence in the economy, not good for gold. Remember, gold thrives, guys, when there are banking crises, when there is war breaking out, when there's uncertainty in the world, when the Federal Reserve looks incapable of handling a situation. That's when gold flies. But that's not the scenario right now. Will it be in the future? Sure. There will definitely be times in the future where things are very uncertain and gold will probably run higher. Long term, I think it would be very foolish to be a long-term perma bear on gold. That would go against the 5,000 years of history we have of gold going up in price, right? So gold goes up over time. But in the meantime, if the Fed is going to be a problem for gold, meaning they stay higher for longer with their interest rates, it's going to put pressure on gold to the downside. So right now, I am waiting for a break one way or the other from a fundamental story for gold. Right now, I think we're a little bit mixed. If anything, I lean bearish on gold. If we got a breakout of structure, I might actually even look for shorts on gold in the short term. Real quick, guys, do me a quick favor. What chart should I do next? Comment it here in the chat for me, and I'll try and pull one up for you real quick. I do see US 30 asked for, and I'll do that really quick just because we're on the topic. The indices are giving us a pullback, I think. If you're an index trader, let me just say you've got 4 letters that matter more than anything else today. Is it FOMC? No. You know what it is? Does anybody know? I'm thinking of 4 letters, and they matter so much to stock index traders today. Does anybody know them? Does anybody know the 4 letters? 4 letters that matter so much to stock indices today. If you trade the NASDAQ, here's your hint. It's very important to the NASDAQ. Ding, 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 ding. We got it. NVIDIA. NVIDIA reports their earnings today. And NVIDIA is the crown jewel of the financial markets right now in terms of stocks. This company is the leader of the AI revolution. This is like, give this stock a crown, right? This is the worst crown you ever saw, but give it a crown, because here's the thing. NVIDIA makes chips, and chips are needed for all AI everything. So they're like the you know, if everybody's rushing out west to go mining, these guys are selling the picks, right? These guys are selling the pickaxes. Same thing for the AI sort of revolution. When you look at NVIDIA earnings this afternoon, if you are somebody who trades the NASDAQ, the S&P 500, the Dow, the Russell, well, maybe not the Russell, maybe not the Dow as much, mostly tech stocks are going to drool or obsess over NVIDIA earnings after the hours. Now, yes, FOMC matters still. But again, the four-letter word that matters the most to stock index traders right now is NVIDIA's earnings after the bell. Incredibly, incredibly important, guys. I almost want to stream NVIDIA's earnings. Do you guys think I should stream NVIDIA's earnings? Does anybody even care? Type yes if you really want me to stream NVIDIA's earnings, because I'm almost tempted to do it because it's so important to the market. I'm curious. I've never done an earnings stream for stocks because, again, my channel is not really oriented towards stocks. But when it's so important to the overall index market, NVIDIA is massive. It'll probably either stop me out of my current NASDAQ trade or help me out significantly, but we don't know, right? So again, NVIDIA earnings are massive. Maybe we'll do a stream. You guys seem to really want one. What time is it? It's 1:16. I can't go from now until then, but perhaps I'll do something there. I haven't decided. We'll see how today's stream go. This is going to be an hour and 15-minute stream, so I'm going to be a little tired after this, but we'll see. I might do it. Anyways, yeah, NVIDIA stream. You're tempting me, guys. An NVIDIA stream sounds pretty fun. Anyways, looking quickly at the cousin of gold, it's silver. Silver on the daily chart has been a chop fest as well. This one's been a little bit tricky. I am long oil. This is a position that I currently have. Picked up oil. I want to go down through the setup here with oil. Do you remember just a moment ago when I mentioned that right now, my outlook for 2024, at least for now, is that the economy is going to continue to impress? What do I mean by that? PMI numbers, retail sales numbers, not a good one for me to quote right now because they were terrible last week. But I do think that overall PMI, GDP, retail sales numbers, labor market statistics, I think they're going to impress this year. Why am I saying that? Well, because that's kind of the trend we're in. I'm a trend follower, both on the technical analysis side as well as the fundamental analysis side. Right now, labor statistics are pretty strong in the US. The Edge Finders top setups currently have oil as a pretty bullish setup. Part of the reason for that is because, again, we have strong labor statistics. We also have hot inflation. These things are generally bullish for oil. Now, again, retail sales dragged us down on the eco section of the Edge Finders algorithm, but we have a slight upward trend. Seasonally, it's a good month. And one thing, don't forget, guys, the commitment of traders shows that institutional money is getting long oil. Nick, how the heck do you know that? You're just talking about reading candlestick patterns, right? Nope. Totally just throwing myself easy questions. Anyways, I do think that we're having some maintenance possibly on the COT. I hope not, because I want to look at it. But if we are doing maintenance, we're doing maintenance. But let's just refresh, see if it comes up. By the way, if you're ever using the Edge Finder and it does blank out like that, it is likely because somebody is working on the Edge Finder behind the scenes and it occasionally needs to update. But we are good. COT is good. Let's look at this, guys. COT data. COT data right now. US oil. Okay, look at this. And again, if you don't trade oil, just bear with me because I'm just going to show you the strategy behind using the commitment of traders data. So the net positioning for oil right now, look at this. Lots of long contracts relative to short contracts. From institutional money, they're demanding way more bullishness on oil, almost to 70%, 69%. Nice. 69% on oil, long, 31% short. This is not your average trader. This is institutional money is bullish on oil. By the way, I see some people asking for pound USD. Look at this. Stay on topic with me. I know you want to look at the chart, but give me a second. I'll show you a more important chart. This stuff is more important than technicals. I know some people will get mad when I say that, but it's the reality. This stuff is what really moves markets, not just pretty support and resistance levels. Although I use those things myself, they're not the only thing that matters. Do me a favor, please stop spamming the chat so I can read people's comments. I want to try and help out as much as I can. So if you spam the chat, I cannot do that. Look at this. Same thing with the pound. We have a mirrored scenario here. Look at this. GBP. Lots of bullishness from institutional money. But look at these two things here, guys. Look at this. Let's do pound or oil. It doesn't even matter. We can go, they're saying the same things right now. Look at what institutional money did on the latest weekly filing on the COT data. Long contracts versus short contracts open, there's a lot more long. Okay, so that would impact our long percentage, giving us that 69% long ratio. At the same time, look at this, the net change in the latest filing, in the latest report, guys, big increase in the pound, big decrease in shorts on the pound. So how do we read this? Well, a lot of institutional money that was short covered their positions. That's bullish. A lot of people added long contracts. That's bullish, right? Something to think about. Now, you can also go ahead and take a look at US oil. Look at US oil. Same thing. They added a significant amount of long contracts and they decreased a significant amount of short contracts. It's a net increase, bullish. So this is how we read the COT data. If that was helpful, if the COT breakdown there for you was helpful, do me a quick favor, just type yes in the chat. Let me make sure you guys are good on that topic before I move on. Again, understanding the commitment of traders data is something that can be very confusing to new traders. You might have heard about it before, but our software makes it easy to read. And I want you guys to understand how to read that. So you're on the same page with me when we talk about institutional money and trying to track it. This is how you do it, right? You use the net positioning, you look at the weekly filing, and you take a look at each piece of data. Sometimes people say, well, the COT data is lagging, which is a fair thing to say, but net positioning and weekly filings are still valuable resources because it shows sentiment amongst institutional traders, which, by the way, institutional traders, for the most part, they have huge positions to fill. So they're not scalping like the 5-minute chart. They're generally moving in or out, and they flow over time into and out of assets. They accumulate and distribute over time. So if you're trying to track and understand institutional money, this is a very useful tool for that reference. So again, they're bullish on the pound, which I think is very interesting. They're also bullish S&P, they're bullish CAD, they're bullish Kiwi. Let's take a look at the dollar. While we're on the topic, they slightly bought the dollar. And overall, the net positioning is pretty mixed. You can see 52.5 to 47.5 mixed. By the way, we're doing a big stream here. We got 40 minutes to go. Would you guys like me to? Let me ask you guys a question. I'll do this if you guys want. Does anybody want to pick up the copy for 50% off? Do me a favor real quick. If you're down for that, if you would take it 50% off if we offered it, I don't have strict plans to do this or not. Type yes if you want us to do a 50% off just for today's stream. This will be just during the stream. No continuation after that. Literally for the stream only. If you're somebody who's been thinking about getting the Edge Finder, we'll do 50% off the COT data as well as everything else on the Edge Finder, the top setups algorithm, all this stuff. The reason I say that is we have some big, huge market data coming out in the weeks to come. If you want to use data to help you trade better using the Edge Finder, straight up, is this a sales pitch? Yes. Is it a great product? Absolutely. We have thousands of people using this tool and improving their trading every single day. So if you'd like a copy, we'll do 50% while we're on the air only. And all you have to do if you want it, click the link here, send us a direct message us right now, letting us know that you're watching the stream. We'll do half off. 80% off, you have yourself a deal. We can't do 80%. 50% is literally the biggest discount we ever do. So 50% off during the stream only. There it is. Final chance. We never do bigger than 50%. We never have done that in the past. So there's your chance. Can you do pay in installments? Message us. We'll work something out for you. Again, Chandler, if you don't mind dropping that link one more time. For anybody who didn't get the link, it's being dropped in the chat here for you right now or at the top of the description. There you go. Take advantage. Again, do not miss that chance. We do not do 50% very often, but because we've got so much market data coming, I want more people using our tools to get a better insight on the market. Let's take a look and see what's been moving. The VIX is up, but it's been up for the last few days. This is kind of interesting. Let's see what we've got going on with the VIX. The VIX jumping up to 15.8 currently. At one point this week, it was up to almost 18, which is a big jump. Yeah, that's huge. How much after the 50% off? Just shoot us a DM. We'll work something out with you. Figure that out. All right, the S&P 500. This will be so. I want you guys to also understand something about the meeting minutes. They're going to move everything. There's no place you can really hide when it comes to watching the meeting minutes or anything from the Fed. Now, will it certainly cause a spike? No. That's what you need to also understand about this. And I want to be clear. A lot of traders will try to essentially trade a spike on this event. Let me be very clear that the spike that will come will not be like an FP or CPI. The reason is because what's coming out, by the way, guys, is not a meeting. It's not a number. It is a report, essentially, of the conversations had behind closed doors with the Fed chair and his team, right? The reason I want to point this out is because a lot of people will think it's going to spike massively one direction or the other on this news. And that's simply not the case. You might get some big movements, but they're not going to be an instantaneous spike. If it is, it's likely due to the algorithms that are kind of trading all over the market, right? There's all the different quant funds that are using different algorithms to trade. We'll shoot off trades and things like that, reading the report with AI. But for the most part, it's not quite the same as a simple number like CPI or NFP. Gold is trending higher here, but overall, again, remember the daily chart context is pretty key here. Struggling to really break one way or the other strongly. NAS 100, I'm still in my trade, but we might get stopped out on stream. Who knows? I've mentioned my game plan with the NASDAQ. I have 3 levels marked up on my chart for a very specific reason. I am looking to try and buy the NASDAQ and catch a run higher. My first attempt here started out really good, but we've come back since. We're now in drawdown, and I very well could stop out here today, even on stream. It's possible that I stop out. This, however, is my first attempt at getting long the NASDAQ. I have full willingness. If this does not level out, I've got a small size. It's not going to kill me by any means. And I have the possibility of building, entering into what I think to be better discounts on the NASDAQ. So I'm still on trade number 1. If this thing just blows through my stop loss, then it is what it is. I take a small loss. But then I might be able to get my second entry attempt. My second entry attempt will probably be around 17,200. These are not pending orders. These are rather just levels that I'm going to be watching. I'll be looking at lower time frames. If I do make that decision to buy the NASDAQ, I'll share that within our Discord. But yeah, I mean, I'm watching the NASDAQ close. I am long already on it. And if this continues lower, I'll stop out with my full intentions to give it another couple shots. So yeah. That's where we're at with the NASDAQ, watching this one close. Again, like I said, I'm still just in trade number 1. We could still bounce back if something comes out dovish sounding from the Federal Reserve. If they do see progress in inflation and things look good, then perhaps we see a bounce back. But remember what I said earlier, guys. The key event here for the day, if you are watching NASDAQ, is not FOMC. It's NVIDIA. We just got done talking about this. NVIDIA earnings happen after the bell. They are far more important to the NASDAQ and its continued rally or lack thereof than the FOMC meeting that we're about to get. The meeting minutes are less important than NVIDIA earnings, in my opinion. I could be wrong about that, but that's my best guess as to what is going to be more interesting to the market. If NVIDIA has strong earnings and remarkable guidance, the NASDAQ could rally 0.5% to 1%. But if it underperforms in any way, shape, or form, NVIDIA could sell off a couple percent easily and could push lower. And if that happens, I'm more than willing to get my second entry. Like I actually would be fine to get a little bit better of an entry, I would argue, on the NASDAQ. So yeah, a lot of people ask about pound USD. Let me pull up pound dollar. So the pound has been gosh, this is such an ugly chart. What a horrific chart. I don't know what it is about a lot of charts right now. Actually, I kind of do know what it is. We've talked about it all day. The dollar has been tricky one. It's been back and forth. It's been choppy. It's been here. It's been there. And you can see it in this chart. I mean, who really wants to trade in this chart? This is a horrifically ugly chart, unless you are a range bound market trader. Now, some traders in the audience might be like, Nick, this has been the best type of range to trade. If you're somebody trading the hourly chart and you're selling highs and buying lows, you totally disagree with me right now. You say, Nick, you just keep your mouth shut because I love the way pound dollar is trading. If you're somebody who is a counter trend trader or a range bound trader, you love this. But if you're someone like myself, who I like to trade trend following setups, like I like to, see market follow throughs and, one directional trading really with just pullbacks in between, this is a market that's really tough for me to trade. That being said, though, we have the potential here today to see maybe a continuation of this breakout that we did see. We did see, a impressive push there. But now the question will be, as we pull back into this zone, can we get continued selling? If you do start to see, by the way, a break through the lows of this level, perhaps on something that's more hawkish sounding, or at the very least less dovish sounding, right? It could push the pound dollar lower, but we're just not quite there. So what am I looking for? I'm looking for, again, we've reiterated this on the stream several times, but going back to the US dollar, right? If this meeting has inklings of the economy is really strong, we don't see a need to rate cut anytime soon, like we're going to push it back, like we may still see 3 rate cuts, but maybe we don't. If you get that mixed in there, the dollar will strengthen and that will push the pound lower. That's where I generally lean, but it's not a certainty, right? Because of course, what we could also see is the inverse. We could see, we see risks to keeping rates high for too long. That could mean the dollar would be very bearish, and perhaps we trade back into this choppiness, and the pound dollar just goes nowhere for the next 700 years. But again, we'll see how this plays out. The pound dollar is not one that I'm personally trading right now. In terms of currencies, I do have a Euro USD short on right now. This is a position that I am already in, and it is slightly in profit already. But we'll continue to watch this one. Here's the euro dollar. Why is the euro trading a little bit smoother? What's going on here with the euro? Well, let me show you a key chart. Actually, while we're on the topic, institutional money sold euro. That's something to mention. Part of the reason why, again, I'm bearish on the euro dollar. At the same time, institutional money bought the US dollar. So first thing to note, why am I bearish euro dollar? Well, institutional money sold euro, bought dollar in the latest filing. That's part one. Part two is look at this, okay? Go over to inflation really quick. And let's compare notes between the ECB and the US Federal Reserve. Okay, check this out. Inflation in both places has been coming down. Remember, inflation is what the Federal Reserve and ECB and Bank of Canada and all the good guys and girls that make all the financial market decisions, right? They look at this stuff. This is the stuff they look at. So if this is the stuff they look at, then why do we only use head and shoulders patterns and trend lines? Something to think about, right? You got to kind of position yourself. What do hedge funds and big players at the table? I made this point in a tweet recently, and people seem to kind of resonate with this. When you see interviews of institutional traders, how many of them are talking about support and resistance levels? None of them, right? Very few. I mean, they might mention, oh, it's at a key level or something like that. But primarily, hedge fund managers, asset managers, pension funds, like they look at macroeconomic numbers and events and things that could be risks to their portfolios. They're not talking about trend lines, right? Not to say that trend lines are useless or that support and resistance is useless. I use it in my own trading. My point though is that they do use fundamentals. All of them do, right? Almost every institutional level trader, anybody who I have spoken with on my channel in podcast form, all of them who I've interviewed have used a large portion of their analysis is fundamental analysis. And most traders on the retail level don't even know what interest rates mean. So again, it's really important that you listen to this topic. Europe has seen inflation coming down and has really actually even outpaced the US in that regard. But then you take a look and you say, well, look at the US. It's come down too, but now it's kind of stagnating and we've seen a change in this trajectory. What does this tell you? Well, it tells you that the ECB may be looking to rate cut sooner. And if they rate cut, remember that rate cuts are going to be more bearish for a currency. So if rate cuts are expected to be more bearish or sooner for the euro than the US dollar, again, that's my bias right now. That could change. But if the ECB is looking to cut rates sooner than the Fed, that's going to paint a really bearish picture for the euro USD. So it's why I'm short. And I've been bearish on this one. I've been bullish on the US dollar for a couple weeks now. It's been playing out well so far. It's why I'm also not super interested in buying gold at this time, right? I'm trying to stay patient on this one and watch closely as we continue to get more US economic data. But we are staying bullish USD until something changes. Could that change today? Maybe. But you just have a lot of evidence, I would argue, for dollar bullishness right now. You have the producer price index hot, you have CPI hot, jobs data hot. All of those things are more indicating towards a bullish US dollar. So again, I'm staying bullish. Staying bullish dollar, staying bearish the euro. Quick look at top setups real quick. Let's see what we've got on this screen. Again, I may need to refresh this page. Let's see, what else do I have? I have oil open. Oil's been a decent one for me. We'll still watch this one. I picked it up at this support zone. I'm watching oil into this. And by the way, will oil move on this event? Probably so. If you do get something that is, dovish, it actually could be helpful to the trade, because if they do look to cut rates, the demand for oil could increase if the economy stays kind of strong. While inflation keeps coming down. That could be really, really interesting for the oil trade that I'm in. So Euro, Pound, Aussie, Kiwi, flip it around, take a look at setups right now. We got DAX, Pound, Yen, US oil. And what is this doing? I mentioned just how important fundamentals are. What the Edge Finder is doing is it's looking at all these different economic figures, as well as the commitment of traders data, retail positioning, looking at seasonality. It's looking at these things and it's automatically generating bullish and bearish setups. The Edge Finder has been pretty bullish on a lot of pound pairs recently, which I thought was kind of interesting. In fact, almost all pound pairs are getting some form of more bullishness, which I thought was really interesting. But again, it's looking at all these different data points. It's pulling them all into the software and automatically generating a bullish or bearish bias. And again, that's part of the reason why I picked up oil. I am long oil off of this. We'll see how that one wants to run. Stop losses in place below the lows. If we do get stopped out, that's no big deal. We have a small position size overall. Let's keep going. The China trade, by the way, if you've been watching the channel regularly, then you know the China trade has actually really picked up. We got bullish on the Chinese stock market, and it's actually been a huge breakout. And still in that trade, that's been really good. Real quick, we'll look at Bitcoin too. Bitcoin will be interesting. Believe it or not, this meeting actually could very much impact Bitcoin as well. If sentiment is more likely to be optimistic going forward, meaning maybe they're going to start cutting rates because they can, because inflation's made progress, Bitcoin would continue to fly. It's probably and arguably why Bitcoin already has moved higher. You could say, well, ETFs were a big deal and that sort of thing. And, while I think that is actually a bullish thing to have Bitcoin ETFs, which I picked one up, IBIT, IBIT, Bitcoin has the potential to move higher if we enter into a continued risk-on environment. Remember that Bitcoin, if you want to be a fundamentalist and you want to talk about Bitcoin, keep it very simple. Bitcoin is a risk asset. When markets look optimistic, Bitcoin will probably do well. When markets look terrified, like in 2022, Bitcoin will do awful, right? As much as Bitcoin bulls would love to believe that this thing is just going to go up and up and up. And by the way, I have a position, so I'm just saying this candidly. This market is subject to the same things that stocks are. It's very similar, in my view. Bitcoin is very much like a leveraged position on the Nasdaq, or maybe even more like the Russell. It's like a leveraged Russell position because it is impacted very heavily by interest rates and inflation. So as much as people would like to think of this as just kind of a unique asset that trades on its own, and the halving is going to send it to the moon and all that sort of stuff, sure, there may be some forces there, but the big one is it's a risk asset. It goes up when markets look good. It goes down when markets look bad. That's the reality. And you can stress test that. Look at the different market regimes that we've been in. 2021 was optimism, stock market blasted to the moon. So did Bitcoin. 2022, stock market got destroyed. So did Bitcoin, right? So something to think about. Take a quick look at the gold market on a lower time frame. I want to look at this for a moment, see what we've got on this. And then I'm going to remind you guys about something in just a second. So look at this. Gold still staying in a range. If you do get a breakout one way or the other this week, it could give us something to work with. And I do think that, if this meeting has something incredibly dovish, gold could actually start to break out higher. And if that happens, I'm not opposed to getting bullish gold and reversing and being bearish on the dollar again. But I'm going to remain sort of data dependent, wait to hear what the Fed has to actually say before I jump to conclusions. Right now, the Fed is leaning more towards, the economy has been really strong, and we don't necessarily see rate cuts, being our immediate jump to rate cuts anytime soon, right? So you look at that stuff and you say, okay, well, if that's the Fed's mantra right now, then we got to stay cautiously bearish on gold. However, if the Fed changes their tune, boom, we got to get bullish, right? We have to be reactive. We have to trade alongside what we're seeing in markets. So we'll watch for any inclination of that here today on the stream. Is there anything that can push them to cut rates? Absolutely. And this is a great question, by the way. What can cause the Federal Reserve to need to cut rates? Well, a couple things. We just pulled up the inflation chart. Let me show you that one more time. Inflation did come out hot last week, which is why I'm still kind of bullish on the dollar. Inflation is still staying relatively stubborn. Now, if inflation, if it starts to continue to go down, then you have prospects for rate cuts. At the same time, if you have labor statistics like jobs data and jolts, if these things start to show real signs of slowing, then you might get rate cuts. So if you want to ask, when are rate cuts coming? You need to look at the two big things that the Fed talks about most. They talk about inflation. They talk about labor statistics. Right now, the reason we've been more on the bullish side of the dollar in recent weeks is because inflation has been stubborn and jobs have been strong. The Fed is not threatened right now. They don't need to cut rates right now. That's what we've been saying over and over and over. And in a moment, we'll talk to Frank about that as well. But that's what we're currently seeing. Until we see inflation meaningfully coming down or unemployment tick higher, which would be the more concerning case, we still see rate cuts still coming later in the year, right? Not an urgent or pressing thing right now, which, by the way, if you're an index bull, that's, in my view, what you want to see. You want to see them cut rates passively because they can, not urgently because they have to, right? Keep it very simple. You don't want rate cuts dramatically because that usually would indicate, oh my gosh, we might be going into a recession. We need to control this as fast as possible. Again, we go to the top setups to keep an eye on things. We are still bullish oil. We're looking at euro yen, Kiwi yen, pound dollar, Kiwi dollar. You are getting some reads against the dollar right now. So we'll continue to watch that, see what we get in terms of setups. lot of pound pairs. I think maybe we'll ask Frank about the pound pairs when he gets on, because I think he was mentioning those. But other thing is, again, remember the COT data, real key indicator, pound super bullish from institutional money. Big money seems to be getting long that. S&P, what has me a little concerned is the NASDAQ was not super bought in the recent weeks. But that could also be due to, NVIDIA earnings coming and being a little bit concerning to markets. Gold was a big sell. And this is another thing you guys have to pay attention to. Institutional money sold gold last week going into this one. So that's a really interesting thing to pay attention to. By the way, we're on the clock for 15 more minutes to go. And before we get there, let me just mention this. We are doing on stream only. This is a very exclusive short-term offer. We're doing 50% off. That is our biggest discount we ever do. You will not see a bigger discount out there for the Edge Finder. If you would like 50% off the Edge Finder, you can use our software to look at COT data, the smart money indicator, bank forecast, retail positioning, investor sentiment, put call ratios, seasonality, NAIM exposure index. We have so much market data. If you are somebody out there who's trying to level up your trading analysis, get a copy of the Edge Finder. If you guys in the chat wouldn't mind dropping the link a few more times for anybody who would like, here's what you can do. While we are on stream, this is a short-term offer. We are only doing this for a very limited time. If you'd like a copy of our software, get 50% off. Shoot us a DM. Click this link. Click chat now. Click Edge Finder info/discounts and let my team know that you're watching the stream right now. We'll give you 50% off the Edge Finder. That is a huge discount that we very rarely will ever do. So take advantage. Click the link here in the chat. We'll drop it one more time for anybody who didn't get it, and we can go from there. Again, the Edge Finder has a remarkable set of information and data. We have a wonderful team behind the scenes that constructs, maintains, and builds all this stuff that you see on the screen. So if this tool would be useful to you in your own analysis every single day, like I use it, I highly recommend you pick up a copy while we're on the stream, because that's, again, 50% off. That is a massive save, hundreds and hundreds of dollars on the tool. So yeah, there you go. So take advantage, shoot us a DM. Someone from our team will get you hooked up with a copy before that ends. Gold question mark? Yeah, again, gold, I'm going to stay a little cautious on this one. We saw big selling from institutional money. We also kind of have a scenario in which U.S. economic data stays strong. My lean on gold would be bearish. Now that could change today, but right now we're still chopping around anyway. So I don't have a short position. I'm not bearish enough to actually sell this market or anything, but it's a market I'm watching nonetheless. Real quick, guys, we're going to take a break. We're going to bring on Frank to help me take on the markets as we get closer in to this FOMC meeting minutes coming out in just over 10 minutes. Right after this, we're going to speak with Frank, see what he's got for us. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we're back with Frank. What's going on, Frank?
Hey, how's it going?
Pretty good. Frank, I kind of teased this topic, but I'm curious what your thoughts are on the pound pairs. We had a huge institutional increase on the COT data that we talked about earlier in the week. The pound saw a big jump on COT stuff. What do you think about the pound pairs right now? I know you mentioned them to me earlier.
Yeah, so what looks to be really bullish on the COT side might be translating over to tomorrow's PMI numbers. So maybe it's a bet on higher PMI data than the previous month, or just higher than expected. But I think there's just some, in terms of sentiment around the US and UK and Europe, I think maybe pound is where investors are going now. And I'm not quite sure why, but I see there's just more strength in the UK's currency versus others right now, and it's just unusual to see such a change in investor sentiment on the pound. So I I've been interested in looking at long trades on the pound, but one that caught my eye was because the Edge Finder has this as the top or the strongest bullish reading.
Hmm.
This is pound CAD,
Yep.
and I think there's a good fundamental argument for that too, because people are trying to guess who will cut first, and I think that CAD's inflation is doing much better, um, like in terms of rate wise, as or better than the U.S., better than UK. You're seeing inflation come down at a harder rate, which is nice, and it's good for the economy, but it's also not very strong for the currency. So seeing higher rates for longer in the UK, seeing higher PMI data, which would indicate higher inflation, keeping rates where they are, would be a pretty bullish sign against CAD, which is looking like it might be wanting to sort of look at the interest rate cuts soon. So yeah.
Yeah, Frank, that's a really good point in terms of the Canadian dollar. Actually, if we flip it over to my screen, I want to illustrate what you were mentioning there. So Canadian inflation has really come down meaningfully, and when you cross it against specifically the pound, here's that story unfolding, Frank. You have the UK, inflation is coming down pretty well across the whole world. But you can see when you're talking about the race to rate cuts, Canada hasn't beat. I mean, inflation has been coming down meaningfully. We saw CPI the other day for Canada come down, even further than what was expected. And so you do have a really good point there. When crossing, pound against the Canadian dollar, it could be a fair thing to say that, the Bank of Canada likely to cut rates sooner. So perhaps you stay more bearish the CAD and you stay more bullish the pound. Not to mention that COT data that showed, again, institutional money very much loves the pound right now. Is an interesting thing to point out. So I like the trade. I like the idea. Pound pairs look interesting so far. What do you think about pound USD? Do you have a thought on that one?
Not really. I'm not too heavy leaning either way. It is still bullish, I guess, for
Yep.
me on the Edge Finder specifically, but I'm looking at, what could be a weaker currency compared to the pound, and I think CAD might be the better candidate than the dollar right now, just because the dollar we're not expecting rate cuts. So
Sure.
I think the March one is pretty much off the table. But if you were to look out further into, say, I think June, starting in June and then onwards, you see the expectations of one increase. So not that there
Yep.
won't be a rate cut, or at least expectations of one, but um, for now, I would say no. I think Canada's probably going to be the one that cuts sooner.
Yep, and fair enough. And Frank, to go off of that topic, as we get closer to FOMC, we've got the dollar index pulled here. I think, guys, that's a record. Hello to everybody who is hanging out with us for the first time ever. 1858. That's a lot of traders out there. I hope you're having a great day. And I just want to come back to this dollar concept for a moment. Check this out. The dollar index is trading just around 104. I've made this case earlier, Frank, but this is kind of where I lean going into this report. The dollar looks strong off of the idea that, again, the U.S. economic data has been really hot, like the PMI data, the jobs data, right? NFP, CPI. We've overall had a really strong string of data out of the United States. Now, that being said, inflation is still coming down, but it's very slow. And so I think when you're talking about the Fed and when they're going to cut rates, I think we start to see a picture where, the US dollar may be stronger than other currencies for a bit, as other places are seeing, recession, like the UK is in a very mild recession right now. So you have this different picture across the board. The other thing to add to that is that the jobs data, as we've mentioned earlier in the stream, has been really hot for the US. So if you're somebody out there who thinks, oh, rate cuts have got to come in soon because the jobs data is going to start to crack. Well, we haven't seen that crack. You might be right. Rate cuts might come once you start to see the unemployment figures start to tick up. But that's what people have been saying is going to happen for a while, and it hasn't happened. So we continue to see the scenario where data is strong. And in my view, this trend for the dollar can remain intact as long as we continue to see that story play out. So I remain bullish on the dollar. We'll see how it plays. I do have a euro dollar short position currently open. So we'll see about that in terms of where we go. I do also want to mention, as we get closer, if you've been watching the stream for a few minutes, if you want access to our software, the 50% off sale, this is kind of your last call. We won't be live for much longer. So if you've been thinking about getting a copy, take advantage, 50% off. Click the link that will drop here in the chat. Chandler, if you don't mind dropping it a few times, as our chat is blowing up today with everybody hanging out. We got 21. That has got to be an all-time record, actually, which is crazy amounts of people. Take advantage, get 50% off the Edge Finder before that ends. And again, that will end with the stream ending here in just a little bit. Frank, I want to come back to you on this dollar index. Do you agree? Do you disagree? And I guess, what are you playing off that? Are you watching indices, watching gold? What else are you keeping an eye on?
Indices for sure. I think the fact that the dollar and indices are in pretty much a relatively strong uptrend since the beginning of the year showcases kind of how economic growth is both beneficial to the dollar and indices overall. I think the major concern right now is, like, what is the Fed going to do? And it's something we always talk about. I don't think that today will have a lasting impact on price action in the direction of either market. But I think that as long as we see inflation do what it's been doing, which is coming down, although it is beating expectations, or at least in the last month it has.
Yep.
As long as the rate continues to come down, I think we're in a good spot for both, honestly, just because the dollar's going to see strength regardless of I guess, where interest rates are forecasted, just because of our current state is higher rates for longer. And indices are kind of resilient. So at what point does one of them crack? And so far, nothing has really happened to suggest that, other than this break in the trend line, which you have to watch out for. So I'm not necessarily looking at a long or short trade on the NAS right now, but I'll still be holding on to my long positions for the long term, I guess.
Fair enough. Yeah. And again, we are getting very close, guys, here. We got just about 2 minutes to go before the meeting minutes drop. Let me just remind you, this is not a speech from Jerome Powell. I see some people questioning in the audience, like, hey, are you going to pull up the stream? There is no live stream for this. This is a report that gets dropped. It's notes from the meeting that happens behind doors. This is not something that happens on camera. We are here, however, to provide you guys the latest updates that we can find. We'll be pulling those up. And Frank, if you want to, on your own end, I'll be doing the same thing. Let's pull up what we can. If you guys in the audience find some details from the meeting minutes when they do drop, please share them with the crowd, share them with the room. We'll be doing our best here. And Chandler, if you could let James know also to do the same, that would be super useful. This is something where basically we're going to need to like browse Twitter and find the hottest pieces of information that come out for this meeting. But again, we are coming in just about 1 minute. It's not necessarily going to be a breaking news type of event. It's going to be something that we kind of have to dig for the details on this meeting minutes. But we will have the coverage there for you. We got 2,500 people in here. My goodness, that's the biggest we've ever had. So, hey, everybody, thank you for being here, and hope you're doing well. So another thing to watch on this will be yields, which will be interesting to see how the bond market reacts. We do see Bitcoin trading lower. We see gold almost flat. Silver's down 1%. Stock market, S&P 500 down 0.25%, but this one could be moving. Fair warning for those of you guys who are watching indices, currency pairs, gold. All of these things are set to move within the next few minutes here. So we are coming in. We'll go ahead and roll a breaking news just for fun. All right, guys, and we're narrowing in here. Frank, I'm going to be doing some research on the second screen, see if I can find anything as we get closer here.
I just don't think that anything's going to change drastically from what Powell says. So I'm not expecting a huge difference in sentiment from the Fed, at least.
Yep.
The market's going to move regardless, but
I'm trying to pull up whatever I can. Again, audience members, if you have something, please feel free to share it in the chat. I'm going to be looking for, we got 2,900 people. What's up, guys? Wow. It's crazy. I don't think we've ever had this many people on stream. We're watching again. We're going to be reporting what we find on the, I'm browsing Twitter right now, and I don't want to put Twitter on the screen just because you never know what pops up these days. Twitter can be crazy. We're watching for FOMC. I'm finding some tweets here. Give me just a second. Let's see. Likely at its peak. This is the first of my findings here. So we have FOMC minutes. Fed officials saw policy rate likely at its peak, guys. So we are getting some updates here. I'm continuing to browse Twitter. Let me see what else I can find. Rate cut September. Ooh, market's not going to love that. This is a rumor right now? Rate cuts September. Is that actually a thing? I'm going to keep looking.
That would be the back half of the year, which would be pretty on par with what the Fed's been saying.
Yep. Let's see. FOMC minutes. Officials wanted to see more progress towards 2% inflation before cutting rates. Officials remain highly attentive to inflation risks. Powell plans to start next 5-year review of statements in latter half of 2024. A couple of officials noted downside risks of rates staying too high. Okay. And let's see, do we have some sort of reaction? What's the market doing, Frank? If you want to, we can switch over to Frank's screen. You can look at the markets while I try and pull up Twitter and keep an eye on it.
Sure.
Okay.
Market's not reacting very positively right now.
Okay. Are we selling off? Are we taking out today's lows kind of thing?
Yeah.
Okay.
We're moving closer to the low 17,000 mark, but we still got a ways to go.
Okay, let's keep going. So if you keep browsing markets, I'm gonna find some more stuff here. Let's see what else. FOMC. And again, in the chat, we have some people kind of pointing out stuff as well. Wow, there's 3,300 people. You guys are, I don't know how you found us, but the algorithm connected us, and we're happy that you're here. You know, we do live stream Monday through Friday. If you'd like to come out and hang out with us in the future, we do all these sorts of events. Let's see. What else can we find in terms of FOMC? I'm trying to find as much as I can. Most officials noted risks of cutting too quickly. There it is, guys. That's what's freaking out the market right now. Let me read that again. Most officials noted risks of cutting too quickly. So remember earlier in the stream, we discussed this. We talked about the idea that there's the risk to cutting too soon. There's the risk to cutting too late. If they're pointing out more so the risks of cutting too soon, the stock market's not going to love that. The dollar index might be shooting up. I'm not sure what it's doing right now. It's kind of flat right now. Dollar giving back some gains now. S&P reversing here.
Yeah, now it's coming back.
Yeah, very interesting.
I don't think this is a bearish sign, honestly, because what has changed? And it's a good thing to hear that they don't want to cut rates too soon, or they don't want to get ahead of themselves. That's just reassuring that they're not going to try to drive inflation back up by accident just to make the market happy. So
Hold on.
Nick, you good? I can't really hear you. I think you're frozen. Well, if I'm still up, I don't know where Nick is, but I don't want to talk with him at the same time though. But here's what I'll do. I'm going to share my screen and I want to look at these forecasts, the Fed Watch tool. So this is, let's see, this is March. So you can see rate cuts are pretty much off. But if we were to move further outward, we go May, things are looking better. But if we were to skip all the way to September, you know, the majority of votes are down here, which is more than a 25% rate cut here. So right now we're at 5.5. Seeing rates down here is a pretty good sign for indices, I would say. Oh, Nick, you're back.
Yep, sorry about that. I don't know what goes on with my computer. Sometimes when stream gets too hot, my thing explodes. Anyways, I had a tweet I wanted to share too. So I mentioned a moment ago, most officials noted risks of cutting too quickly, but at the same time, a couple of policymakers pointed to downside risks from maintaining an overly restrictive stance for too long. Right before I got cut off, Frank.
I think you just got cut off again. You're taking too many trades, Nick. Your computer's breaking down. And he's gone. Darn.
I think I'm back, but I can never tell. Can you
You're
hear
back.
me? Okay.
You're back. I can hear you.
Yeah, sorry about that. I'm not sure. It's almost like when I share my screen, I'm having issues right now, so I don't know what's going on. But I was just going to point out, seems like there's a mixed bag. You made the point earlier that there kind of is this concept that, again, this isn't a drastic change from where we were at. I would generally agree. I mean, we're seeing some mixed sentiment overall, and mixed sentiment kind of leans back into, well, we're still going to get rate cuts at some point. So very interesting to see that.
Yeah, so I'm sharing my screen right now. When you got cut off, I started looking at forecasts going forward, and these are majority of the votes are down in the 450s. Like we're at 550 now. That's a 1% cut is what people are expecting by November of this year. And remember the Fed, or at least Powell was talking about only one this year. One rate cut in the back half of the year, which was going to be 75 basis points max. So expectations are saying otherwise, which is, I think what's more important is what the market thinks is going to happen, regardless of whether or not Powell is right or not, or does what he says, just because the expectations kind of price everything. So
Sure.
seeing a 1% cut, or even somewhere close to that by the end of this year is a very good sign for things like the NAS or the S&P. So maybe it's a good sign for now.
Yep, and a lot of people, from what I can see, Frank, on Twitter, are kind of calling this like a non-event. Like, it got everybody kind of excited, but we didn't really see any solid one way or the other. So the question then, is that bullish or is that bearish? If there's just kind of a whatever, like we're continuing on, like, is that a bullish scenario for stocks, for gold, etc., or is that a bearish scenario? Right now, we see the stock market bouncing back a little bit. The dollar index is pretty, it wicked lower, but now it's kind of bounced a little bit as well. You take a look at gold, it's sort of mixed sentiment as well. Not a huge move in any particular direction. And where that would kind of lean me towards is, let's just revert back to the same consensus, right? Like, okay, let's stay the course at where we're currently at. We still see inflation kind of hot. We still see data pretty strong. Maybe that leans still bullish USD until otherwise. And like you mentioned earlier, is that really that bearish for stocks? Well, maybe certain areas of the market. Take a look and you see Russell down the most today. That would make sense, because this isn't giving any sort of solid guidance towards, we're going to see rate cuts. But at the same time, you see other areas like this S&P 500, the Dow, they're not doing too bad today. So it is kind of interesting to continue to watch that play out.
Yeah, and the Russell's really not down at all.
Yeah.
On the day for the most part. Like, small caps are still hanging in there. I think nothing's really changed. Not that meeting minutes will really have a huge impact on this kind of thing anyways. You got to wait for like FOMC and sort of that bank rate decision every month.
Yeah, no, it's interesting to keep an eye on that data in terms of, if it had given us something more to chew on, like if it had said, like, we clearly need to start making a solid plan for cutting rates, that would have been different. But we didn't quite get that. We kind of just have the same as we usually do. We have this scenario in which, that the Fed is, aware of the risks on both sides, but not really convicted in any way. So again, at least from what I'm gathering, it's not a huge decisive meeting by any means in terms of the notes that came out here. So again, kind of interesting. I'm taking a look here. Let me see. We can try and share my screen. It might explode, but I'll try and share my screen really quick. See if it. My computer's been having issues, but we'll see. Can we try it? Let's give it a shot, Chandler. All right. So overall, still staying pretty similar in terms of setups from the top setups algorithm on the Edge Finder. We do see a lot of pound pairs still interested. We talked a little bit about that with Frank earlier. Pound pairs still very bullish overall across the board. Got a couple of yen pairs on there as well, but we'll continue to watch those. Aussie, Kiwi, Euro, Pound being our only sell side. We do get COT data on Friday. That will be interesting. I'm not going to try and refresh this because it might kill my computer, but we've got at least the top setups algorithm right now. A lot of neutral stuff here as well. If you've been asking, for gold, the reason I've stayed neutral on gold and why it's also been choppy has been the fundamentals have been kind of mixed for gold recently. So I'm staying on the sidelines for that. If you're somebody who's a regular viewer of the stream, remember this is our last call. We're doing 50% off the Edge Finder. If you have not already gotten a copy, you get half the usual price while we're on stream. We'll drop the link for that here in the description and in the chat. If you're with us here live, again, that is a very limited time, 50% offer, just for the meeting minutes here today. So don't miss it. Take advantage, click that link, and speak with someone on our team. We'll get you hooked up with a discounted copy. Rates are coming down again. We saw initially up 1%, now back down to 0.75% on the day. That's going to take a little bit of the bullishness out of the US dollar. It would arguably be why we're still sitting at support. But again, for me on the dollar index, for those of you guys who keep up with the analysis on the US dollar that we do on this channel very frequently, we're watching this support level very close. We haven't broken underneath it. So despite a little bit of mixed price action, we haven't really broken support, but we also have not made a significant rally. It seemed like the market was trying to get something out of FOMC today, the meeting minutes, trying to find something, but we kind of just got a word jargon where we got kind of some things that the bulls would like, some things that the bears would like when it comes to the US dollar. So kind of mixed. I also wanted to mention this to you, Frank. I said this on stream earlier, and I want to see if you agree with this. I think today the market in terms of stocks, if you're looking at indices, if you're looking at individual stocks, the more important event on the table is NVIDIA's earnings after hours. Would you agree? Do you think that's going to be more important?
Yeah, I was hearing that their earnings is like the Super Bowl of earnings. So this will undoubtedly affect all the semis, but it's going to NVIDIA's. I don't know what valuation they are now because of how far it's run up, but this is going to either carry or drag the market down with it when 5 o'clock comes and they release their earnings. But so if you were to look at it though, the forecasts are high. They've been doing nothing but breaking expectations and just surpassing what people have thought. And the introduction of the AI news that happened earlier this year is just another fuel to the flame. So I think NVIDIA, you don't want to jump in front of a moving train, but
Yeah.
you also, I feel like you wouldn't want to bet against it. I think maybe you'd want to sort of either be on the sidelines or if you're in it, then maybe hold on to it. But yeah, this is it's going to be an interesting report for sure. And I think what people are going to want to hope for are the guidance. So people want to see a beat somewhere in I guess revenue or just sales in general. They want to see what it's going to do going forward, or at least what they expect. And that's the major point. But other than that, NVIDIA's, I think, kind of overvalued. But you also don't want to catch a falling knife, and you don't want to jump in front of a moving train. So
Yeah. And I think, Frank, to add to that, just how important that NVIDIA earnings is, even I would generally agree. It's not a stock that I would buy at these levels, but I do trade a lot of the indices as you do as well. And I do think you need NVIDIA to stay afloat in order to keep this rally alive. If you do get NVIDIA earnings that are poor, or you get earnings guidance that's not great, it very quickly could spell a more negative outlook for the short term on the NASDAQ. But that will be interesting. I also wanted to just check retail positioning, as again, we do have that data here in front of us now. So what we're looking at is the indices still very much in terms of retail traders being very net bearish on the indices. You also have some mixed sentiment on a lot of the major currencies except for Aussie dollar and dollar Swiss. So what this is showing, guys, this is showing a contrarian signal, basically when you get a strong reading one way or the other from retail traders. So if retail traders are very much long on something or they're very much short on something, you're getting a contrarian signal in regards to it. Another thing while we're on the subject of indices is the put call ratio, which currently, Frank, we're sitting at 0.93. So not too extreme, slightly bullish. I would say that this becomes more of a contrarian indicator if you get a steeper drop off on the put call ratio. Of course, the opposite would be true if you got a huge spike in demand for puts, right? This is just measuring put to call, relative volume between the two of that. So something to keep an eye on. AAII investor sentiment. This has been another one to look out for. This is basically a survey that goes out and asks people how bullish or bearish are you on markets. We do see a slight increase in bearishness and a decrease in bullishness in the latest filing. We do get some more of this data on Thursday, so we'll get the updated report on that front pretty soon. Seasonality is another thing. We take a look at the scanner here as we kind of cross over into March in just about 10 days, right? So in terms of next month, we do have things like the VIX, we have the NASDAQ, we have US oil, dollar ZAR, and gold. These things are, and S&P 500 and the dollar and dollar CAD. You can see all the different lists on the screen. These are assets that are generally bullish in the month of March, and things that are more bearish are going to be found towards the bottom of this list. Things like euro dollar bearishness in the month of March on a 10-year historical average. So something useful. I always like to look at that as we get closer to the end of the month. And, of course, keep an eye on that. As we have more economic data coming for the rest of the month and going into March, we will have updates on that as well. Of course, we'll have the COT data on Friday. And again, it is working. It's just that my computer is freezing right now.
I can share it if you need to, because it's pulling up on my screen, but I don't know what's going on with your computer.
It's just my computer. It's not the data. The data's fine, but you've got it. There it is. I've got it also. But both ways, again, we can take a look at the COT data that comes out on Friday. And I do want to mention this is the last call. The stream is about to end here in just a bit. We're doing 50% off on the Edge Finder. If you don't have a copy, real quick, we're going to drop this link here in the chat. For you, if you'd like 50% off of the Edge Finder, get all of our tools, get all of our software data. We're a company out of Atlanta, Georgia. We're 10 people total between all of our in-person and freelance team members here at A1. If you'd like to get access to our software, we're doing half off for this stream only. Send us a direct message right now. When you do that, what happens is you get connected to someone on our team of 10 people. You click chat now and then just click Edge Finder info/discounts, and you'll be connected to someone on our team who's capable in answering any questions you have about the tool and can get you hooked up with a copy for that discount. So don't miss out on that. Again, while FOMC was not a huge event, we do have lots more news coming. And as we mentioned earlier, for those of you who are index traders, NVIDIA will be a big event here in just over 2 hours or so. So should be interesting on that front. I just want to check back on gold. You can see gold had a big kind of fake out in both directions. We didn't really get any sort of significant push. And, we'll continue to watch that one close. Frank, I guess going back to the NVIDIA topic for a moment, if
Sure.
NVIDIA sells off and tech stocks like the NASDAQ generally fall, do you buy that dip or do you stay out of the way? Like how strong is that NVIDIA earnings number to you? Like if it's bad, does that make you cautious about stocks as a whole? Or do you take that as a dip buying opportunity? What do you think?
Probably the latter.
Okay.
And it would also depend on what NVIDIA's earnings says. So like what we were talking about earlier is, are they going to beat or miss, which is the first question. And then also, what is their guidance going to be? Are they going to be forecasted to continue to show growth and specifically their revenue and the just basically how much money they're making, or is it going to be the opposite? And if it's that, then we have to consider how much of a footprint NVIDIA and the other major tech stocks have on the market. So I guess a miss in that sense could probably keep NASDAQ from getting any kind of bounce. So we might have to sort of wait on another dip buying opportunity, but I'm not sure what to expect. I'm obviously hoping that it beats earnings and guidance and all this, but it really just depends. So NAS is going to do its thing, but as long as we're still in this uptrend, I still kind of have this bullish bias for buying the dips. So.
Yep, and we talked about this too off camera in the office. We talked about Palo Alto Networks. This is an area of the market that, again, we're kind of deep diving. I know we talk a lot about currencies, indices, gold generally on this channel, but when we're on camera for almost an hour and a half, we kind of got to find new areas to talk about. And one area that I do think is very fascinating, look at Palo Alto Networks, guys. This is a cybersecurity company, dropped off the face of the flat earth with this one. Just kidding. It's not flat. It's just a joke. Don't demonetize us, YouTube. But just a massive sell-off. This is kind of scary. This shocked me, Frank, because of course I don't own NVIDIA directly, but because we're trading the NASDAQ, if you own the NASDAQ, you own a chunk of NVIDIA as well. And something to think about here that made me nervous is, they didn't even have that bad of numbers. And so my concern as we get closer to NVIDIA is that these numbers that came out of Palo Alto Networks, again, a prominent cybersecurity company, they beat on the top and bottom. It was just some kind of lackluster guidance going forward. And look at the company. This company down 27.59%. This thing has been similar to NVIDIA in the sense that it has just gone straight up and been a monster for the NASDAQ and for everything else that it, any ETF that tracks it. So kind of made me a little nervous, Frank, to see something that's been such a market darling just get slashed by 27% in a singular day. So if nothing else, I think it's
miss on market on Sorry, this is a slight miss on guidance. It was slightly lower than what it was. So this is what caused that. So that's why I'm kind of concerned with Nvidia. We have to see something good. We have to see guidance has to be better than the last time. It has to be better than what we are currently on too. So just stuff to look for. Even though Palo Alto has exceeded expectations on like an annual scale too. Even this quarter was beating earnings by a long shot. Revenue was much higher. Their net income in Q1 was 194 million, and this quarter their net income was 107 or 1.75 billion. So a huge difference. But the only thing is guidance, and that's what ultimately destroyed this stock, which is kind of crazy to think about. Oh, you're frozen again. Poor Nick. His computer's really going through it. Could be all of his trades blowing up.
I could hear that. I keep getting kicked out, and then I can come back within a few minutes. But I heard most of what you said with Palo Alto. It will be interesting to see. And again, stock market kind of getting a little bit of a sell off here. We'll continue to watch it and see what happens with the NASDAQ stocks. But made me a little bit nervous just to see again what was a beloved stock in the technology field kind of just get destroyed on not even that bad guidance. But yeah, will be interesting to see. VIX is ticking up here, by the way. VIX up 4.4% on the day as volatility kind of increases. You know, part of me just wonders if that tick up in the VIX may also just be fear around the NVIDIA earnings and just how much they kind of command in terms of market sentiment. So again,
Nick, I have a question for you.
Yeah.
Your option strategy largely is selling puts, right?
Mm-hmm.
Would you consider doing this on any of these names that we talked about? Let's say we wait for NVIDIA, their earnings to come out, but what about Palo Alto? Would you consider selling puts on this? Because we've talked about like potentially wanting to own this stock.
Mm-hmm.
I don't know if I would buy it yet. I'm not quite sure. It is a lot of capital, but if you were to buy it, I guess where would you get it at, and what would you be comfortable in selling a put at?
Yeah, that's a great question. I think if I was, looking at some of these names, I mentioned this ETF to you earlier. We talked a little bit about the cybersecurity in general as an area of the market that I would love some ownership in. It's been a very premium area of the market, which was why the Palo Alto earnings shocked me and terrified me, because again, that's an area of the market loves, and all of a sudden just turned a cold shoulder to, sold off. You can see CIBR, this is cybersecurity companies like Fortinet and as well as Palo Alto, in this ETF and selling off hard. So for me, Frank, I wouldn't mind getting in on some of these companies if I could sell a put on something like CIBR and kind of get the collective, just in case, in the coming months, years, I don't know which of these companies is going to be the best player. I'm not really much of a individual stock picker, though I do like certain companies and things like that. I'd also like to generally be more exposed to a certain area of the market, like cybersecurity, et cetera. So CIBR might be one that you could look to sell a put on, in my view. Like, I kind of like the idea of maybe selling puts on CIBR for if we do see a sell-off further, I could get shares filled at a lower price. Maybe something to look at, like maybe a 51 strike price on CIBR could be interesting. Get me some exposure to the cybersecurity section in general. So, yeah.
Fair enough. That's quite a drop. That's 5% on the day too.
Yep, and that's an ETF too. So I mean, that's pretty aggressive on that front. So yeah. We'll keep an eye again, guys. I apologize for my computer's issues here today, and thanks to Frank for helping me to pass the torch here and get us to the finish line. We had a massive stream. That's an hour and a half behind us, so maybe we'll call it good there. We've been on here for some time. I want to thank you guys for hanging out. There's still 1,600 people on here. Thank you for hanging out with us. That was a record stream for us, believe it or not. That was absolutely insane. So thanks for hanging out, Frank. Thank you for co-hosting with me, and I'll let you go.
Thanks for having me on.
All right. See you, Frank. And again, guys, last call on that. We'll end the stream here. If you're somebody who watches the stream on a regular basis, the Edge Finder 50% off sale will be ending at the end of this stream. Send us a DM right now if you want a copy of the Edge Finder half off. That sale, like I said, is it is ending. It is an only on-stream event. So if you miss it, you miss it. It's half off the Edge Finder's cost if you're a regular stream viewer. Get our software. A1 Trading works very hard to build the tools that we have, and there is your chance. There's your opportunity to get it for 50% off its usual price. Thank you guys for tuning in. Have a great rest of your day. Trade safe, and maybe we'll see you back at NVIDIA. I haven't made up my mind. If you guys want to join us for that, check back on the YouTube channel. Maybe I'll stream it. I don't know. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.